Greetings guys. In this video I'm just gonna touch bases on mid-range trading and also how to combine the two, quantum liquidity trading and mid-range trading. I've switched off my data because of the multiple of messages coming through, so I just don't want any disturbance. And also I want you guys to view the screens. So now we focusing on today's panel, right? So when we trading mid-range, we always have to consider the previous panel, of which is yesterday's activity. This was Wednesday, this is Thursday. So on this current panel, mid-range will give us the predicament, I wouldn't say predicament, but certainty to what's going to happen to future price, right? So I'm just going to zoom in for educational purposes. So now we're going to focus on yesterday's activity for when we conducting mid-range trading. So we're going to take the high of yesterday's activity, which is there, and also we're going to take the low of yesterday's activity. Now the 50% level of the mid-range, it's our correlation zone, so we're going to get that using the Fibonacci retracement. From the high to the low or the low to the high, doesn't matter, but just make sure that those levels align together. I'm just gonna align these levels. There you go. So we're gonna take 50% of which is the mid-range or the midpoint of yesterday's activity right there. Come on, 50% right there, and we can remove the fib level. Okay, so now the significant levels are the high of yesterday's, the low, and the correlation or the midpoint of yesterday's activity. So yesterday's activity, we didn't have that much of a movement. We can also do it on all time frames, it doesn't matter. But basically what we look for on the previous or the current stage panel activity, you're looking at these significant levels. Those are the significant levels that will tell you the pressure or the momentum of price. So firstly, we talk about the new day. When the new day opened this candle, we talk about that candle along with its injection, its liquidity injection. So this candle right there tested tested the 50% level, but never broke. It actually closed on the correlation or the midpoint level right there. So we don't have any pressure. So the significant of the 50% level, it tells you, basically tells you the chances of price building up or building up momentum on the upside. And also you have to consider its volume and also the type of candle that breaks, or yes, that breaks the 50% level. So on that 50% level, this candle, we're talking about this candle now, it tested that level, it closed on that level, but failed to break that level. And also the candle had a low, significantly low injection in terms of volume or liquidity. So now this candle right here, we call this a double confirmation candle. Basically broke. Remember, the significance of this low of the mid-range of previous day is to tell you that price is likely to continue in the direction of the break, meaning the direction of this distribution of the low of the previous day. So now this candle tells us or confirms various factors about these levels, right? So this candle, first of all, point number one, this candle broke the low of the mid-range of the previous day, and it also broke with point number two, it also broke with the liquidity principle candle, meaning this candle equates to one grid block and also aligns with the high volume. So this candle, we call this candle a liquidity principal candle, it gave us a supply confirmation. So what we're gonna do now, just gonna form a liquidity trigger zone on that candle, take the high of the liquidity principal candle and the low of the liquidity principal candle, like that. So everything that hovers within that area, within that pink area, we call it a price, basically within the liquidity trigger zone, right? So the distribution candle, also we must consider the candle that breaks within the zone of the mid-range. So this candle right here broke within the zone of the mid-range but never tested 50% level. So we still have good confirmation that pressure is still going to build up on the downside. So also this candle that broke back within the mid-range has a low volume. So it's just a candle. It is uh, no market makers, no financial entities that's playing or taking part of that the formation of that candle. So now the distribution of this candle, we have a acceleration. Well, we can move to 15 minutes and check all the distributions. It's the current state of my data. Let me just do this. Sorry guys. Switch on my data. Right there. Great. So now when we shift to 15 minutes, we can clearly see that we had a distribution. So that distribution was an execution distribution. So within an execution distribution, we don't just execute the trade. We move to 30 minutes and confirm. So on 30 minutes, it distributed with price. Sorry, man. Distributed with, let's see if that is a price acceleration distribution. It's an execution distribution. Let's delete that. So your entry level was supposed to be here. Just gonna change the color of that line. Make that bold and let's say green. Right. So the green line was supposed to be your entry zone. So it also gave you a chance to stone. This is the stoning area where you could have had, this is your entry benchmark and this is your stoning area right there. So what we do now is you entered there, then when we shift to 1 hour, you must shift to 1 hour to check if there's no new liquidity injections, right? So we already have a supply confirmation and this is an execution distribution, but we already have our entry point there, our entry benchmark there. And look how it built so much pressure, how it built pressure on the downside, right? So this also becomes a liquidity candle, of which you can also form a liquidity trigger zone, right? So it is a liquidity principal candle because of the candle equates to one grid block and more. So we have multiples of supply confirmation. So when you get to your 15-minute time frame, we're going to consider liquidity influx. So liquidity influx is injections, is volume injections, right? So now we got that. That forms part of the confirmation of supply, but we also had another liquidity injection right there. So that liquidity injection on smaller time frame, we call that influx. So it's an influx of injection that will give us distribution. So the distribution in this instance within the liquidity trigger zone, remember this is not a confirmation of entry because it's within the main liquidity trigger zone. So you're gonna do that. Sorry, just want to get this right. Yep. So you're gonna do that, and then the distribution of that liquidity trigger zone was there, but distributed within the main liquidity trigger zone. But the distribution was for supply, meaning in favor of supply, which is the main principal level of, or confirmation of, sorry my confirmation of um, liquidity injection, I mean your liquidity principal candle. And also here I'm only looking for liquidity influx. I'm only looking at volumes that stands out, like this one, that one, that one, that one. So for we need for liquidity influx, we need candles that distributes out of the liquidity trigger zones on the downside in favor of supply. So there you go, easy as that. Notice that I never shift to 4 hours, as if we shift to 4 hours we can still do our analysis, of which we had liquidity principal candle there, of which it weighs on our analysis. It just solidifies our analysis for more clarity, and it broke right there with another price acceleration distribution. So this is basically what you're supposed to do on all these assets when you do your analysis. So in your 15-minute time frame, you execute, you fill in these cheaper price levels. That's a cheaper price level. Anything above this green line, sorry, anything above this green line, this highlighted green line, it is obviously a cheaper price. And obviously when it goes and when it returns in your favor, that's where you bank, that's where you make a lot of money. So basically this I summarize what you're supposed to be doing when you trade. And it's not only for this asset, it's for a lot of assets. And for vortex principle, you can use structures like your harmonic cipher system patterns, or godly system patterns, or pennants, or wedges. But in this instance we don't have any structures, any vortex structures. What we have now, it's a possible, and these vortex structures are not meant for execution purposes, you understand. It's only to add on your primary analysis. It's just a secondary analysis to support your primary analysis. So it's not for entry purposes. Sorry, as these structures are not the one that actually, give direction to the market itself. So it's just to support your primary analysis, that's all. So I hope this video is helpful. If you don't understand this, I tried to simplify it. So if you don't understand this, just hit me up. I think I just simplified it as down to the ace. Let's see this high volume of 15 minutes. Okay, you see, okay, this is a liquidity candle, it's not a liquidity principal candle. So when you get this on your hourly time frame, it's a liquidity candle, and the liquidity candles are meant for continuation. So when you get your liquidity candle, you want your liquidity candle to break within the direction of the main liquidity principal candle, meaning the principal level. I think I'm done here. So yep, there's your video, guys.